All right, what's going on, guys? Hope you are having a wonderful Halloween. Be safe out there. The markets were kind of scary today. They've been all month, but I'm going to talk about something for the both the real estate guys and the stock guys, and kind of what's going on with the market right here, and kind of show you the connection. I'm going to go over the official 2019 housing market forecast from the California Association of Realtors, and I'm also going to show you guys, some of the data that's come out, how I'm interpreting it, what I'm looking for here, and even, we get to see what the general consensus is for 2019 coming into the real estate market, where people think things are headed. And then also, I kind of even want to bring it up for, like I said, with the stocks. Why isn't it going? Some of the home builder stocks, and I did this in one of my other videos and looked at some of both construction, home builders, all that, seeing kind of how they've reacted and with the markets with everything. It's very interesting. There might be a connection. There actually is. I'm going to talk about it when I make that whole giant video explaining everything that's gone on here. But, this meets into it or fits into that model. So let's get into it and talk about this. I'm actually just going to read it with you guys and give you my comments. It's pretty short. It's pretty, straightforward. You guys should be able to understand it. So, October 11th, I know I'm late. A combination of high home prices and eroding affordability is expected to cut into housing demand and contribute to a weaker housing market in 2019. And 2018 home sales were registered lower for the first time in 4 years, according to a housing and economic forecast released by the California Association of Realtors. So that's like your headline of this press release. But pretty much they're saying they see a modest decline in existing single family home sales of 3.3% next year to 396,800 units, down from the projected figure of 410,000. The 2018 figure is 3.2% lower compared with the 424,000. So they are expecting, and this is a big thing to note where it is, they're expecting less homes to sell. However, the question I'm sure a lot of you have, what does that mean for price and what are people expecting with that? So while home prices are predicted to temper next year, interest rates will likely rise, compound housing affordability issues, said whoever would be buyers are concerned that home prices may have peaked and will wait on the sidelines until they have more clarity on where the housing market is headed. This could hold back housing demand and hamper home sales in 2019. So they actually bring this up a lot. The fact that now people are like, oh, I'll wait till it comes down, and there's people who want to go in and investors. This kind of cognitive dissonance between the two is going to make it, pretty bad. And then I hope you guys also see, from the stock perspective, everything, you see why I'm in these industries, stuff like rates and what that's gonna, what's happening with rates. We hear it in the stock market, but we're also seeing it come up here and how even the real estate market and it affects real estate, and that's why too I'm taking this data, using it for the stock market and vice versa too. So the Association of Realtors forecast projects growth in the U.S. gross domestic product of GDP of 2.4% in 2019, yada, yada, yada. So they're pretty much even talking about what they expect with GDP and all that. I'm not going to read that all because they're giving their own, but again, you see how they're bringing up those economic numbers and how they feel about this stuff. And you see why they talk about it on business news, why people are interested in this in the first place. So this is important too. The average 30-year fixed interest rate will rise to 5.2% in 19, from 4.7 in 18 and 4% in 17. And that's crazy. In 16 it was like 3.5, and even 15 below that was lower. So they even say it's historically low, but that is a pretty big increase. I thought, I have a mortgage on one house and it's at like 3.5, 3.7, and I thought it was high, but now people are literally getting 5%. It's kind of crazy to see it jump like that and so fast, but it's fast and slow at the same time. But you see how these rates are important, and for them, they're letting it in here. They're saying all this because this is important for what's going to happen and driving the demand for real estate. So that's why they are discussing it. So California median home prices forecast to increase 3.1% to 593,000 in 19, following a projected 7% increase in 2018 to 575. So this is what I think is interesting, because even though they're expecting sales to go down and they said keyword temper, prices will temper, they don't think it's going to go down. They are expecting, actually, this is what they're expecting. They're forecasting a 3% price growth. So they expect prices to go up. However, temper, think about that. They expect it to calm down. It's not going to get too crazy. 3% is fairly low, when you put that into perspective. You could probably get a better investment elsewhere if that was the case, when looking for something long term. So that's interesting to see, and I want to make sure you guys are aware of that, because even though these might be negative forecasts that they're putting out, how negative could it essentially be, considering that they're not thinking prices are going to drop, they're just expecting things to slow down, and it'll be the first time in a long time, but they're not expecting anything to go dramatically out of proportion here. So the surge in home prices over the past few years due to the housing supply shortage has finally taken a toll on the market, said Senior Vice President. Despite an improvement in supply conditions, there's a high level of uncertainty about the direction of the market that is affecting home buying decisions. This psychological effect is creating a mismatch in price expectations between buyers and sellers and will limit price growth in the upcoming year. When I read this, I was so impressed with them, because this is everything about this forecast is almost pretty spot on with even what I believe. And them talking about this, people are on it. It's not like people are missing this with real estate, which is making me feel a little more confident, is that there is more, I guess, transparency into the real estate market and how we're getting affected by things from China and just what's going on, versus looking at the stock market, everything going on overseas. So, and this is that issue. It's kind of crazy to think about. This psychological effect is that there's this mismatch between price expectations and what people want on both sides. So some people think it's going to go down and wait, and they want to offer a little. Some people don't want to sell their house for this. A lot of people won't sell their house for cheaper. It's creating a very a unique market where sales could slow, but prices and supply can increase, but prices aren't necessarily following that, which is kind of an anomaly and a violation of the law, the laws of supply and demand. But outmigration, which is a result of the state's housing affordability issue, will also be a primary concern in the California housing market in 19, as interest rates are expected to rise further next year. High housing costs is driving Californians to leave their current county or even the state. According to the State of Housing Market study, 28% of homebuyers moved out of the county, which they previously resided, up from 21% in 2017. The outmigration trend was even worse in the Bay Area, where housing was least affordable, with 30% of homebuyers moving out because of affordability constraints. Southern California did not fare any better, as if 35% of homebuyers moved out of their county for the same reason, a significant jump from 21% in 2017. Substantial surge in homebuyers fleeing the state is reflected by the home sales declines in Southern California, which is down on a year-over-year basis for the first 8 months of 18. Outmigration will not abate as long as home prices are out of reach and rates rise in the upcoming year. So they give the numbers, we'll go over that, but that outmigration is that exodus, and I think I've talked about it a few months ago, where people are dipping out of California. And actually, that's what I did in one of the real estate videos when we started seeing where the big price declines were coming from. But reasons for taxes, it's too expensive. But to have 20-30% of people move out of a county and list that it was for too expensive, that's a large amount of people. That's kind of crazy, and that is a population that's a big shift of some sort. So that's important. And again, I love that the board Association of Realtors is on it. So here's their forecast. This is what they've been expecting. 2003, how many homes they were expecting to sell. It's actually kind of crazy, because 2013 the date 2013 did amazing, 414. 2014 was the first time we saw a slowdown, and I think this is kind of where we might be happening, because people were worried in 2014, and 2014 was the first time we started to see this slowdown in China, and or even in Russia and oil and a lot of other stuff with emerging markets and stuff like that. So that is there. My theory with these forecasts, I've talked about them and talked about in the video, but I think just it's international demand. You put 20%, let's say 30% of S&P earnings are coming from international growth. So if we say even 10-20% of the real estate, or that's driving, in most areas, is foreign buyers. And I know, I work in China and do a lot of stuff like that, and I could stand by that. I think a good amount, if those people are not buying, it makes sense how the market could stay up, but it's going to lose some of that steam when you lose that demand. So something similar happened in 14, then it jumped up in 15, then kept going, and then now we're, expected, is that P? I think that's right now. So I think we're expected to sell like 800,000, but we're going to end lower than 2017. And they're saying the first time in 4 years where we're pretty much going to have a decline. and now they're forecasting for 2019 just better than 2014 slightly. So pretty interesting, and you never know. 2013 they expect, or I think, wait, 2013 went down too, I think. So um, all these expectations, it's going to be interesting, how it changed. But the median price, all the while, despite how many homes have sold, you see kind of since 2013, it's almost went up 50% actually in California, which is crazy. So that's a big gain. You see 27% in 1 year, and then the rest kind of came. But then that's kind of how it is. If you're getting 30, you're getting 38, 36%, 40%, and then you go even the next year, that's not too bad. But as you see, like I'm saying, 3% is pretty low, and that's not there. Now, housing affordability since then, it's dropping, and you see why they're bringing that up. But that's where they're at with everything. That's how they think things are going to play out. I think it's going to play out similarly. I'm excited to see what happens, and they could revise expectations if things change, more foreign demand gets in there, and we'll see. But at the best part, I agree. I don't think prices are going to go down too much or get too affected, but it is going to create a new real estate market, which I think for wholesaling, flipping, and it's. I think that this disconnect is going to widen the spreads. If you know how to find deals, you could do that in real estate. Even as an investor, you guys could get some awesome deals now. And even if you are looking to invest in real estate, if you're expecting 3% growth now in California, make sure you're aware of that when buying a property. What is expected now out of a rental and what you're going to get. So these are all important factors you got to look into. So um, I don't know how long that took. I want to go over this data, but pretty much I'll make it quick. The last part, all this data that's come out, what we're worried about, with real estate going down, why we say this. I'm thinking, 2019 might be good. I'm hoping it recovers, but we're now seeing, year over year, your new home sales is literally month after month. I think over the last 6 months, we've pretty much declined since then. We had one uptick here with new sales, but then it's declining. That was kind of going to be our beacon of hope. That didn't come in. This is what I thought was interesting because now you see from January, this is a year over year. So pending home sales is 4% down compared to last January. January 17, compare February, and as you see this, pretty much every negative number, that's 1, 2, 3, 4, 5, 6, 7, 8, 9. That's 9 months. So that's 3 quarters. And, if this continues, that's pretty much some people, the definition of recession is 3 negative quarters of consistent quarters of negative growth. And that's kind of what we're seeing here. So it's a little scary to see and, where things are going. And we're seeing that market slow down. But and again, existing home sales literally since after March, it was low in January, kind of popped, but after March, the market's been down. I've been documenting this for you guys. You've been seeing it, but it's now hitting a crucial point where forecasts are coming out. Yes, these things can change, but now if this velocity does pick up, I would get worried. And, if this data does continue and things miss those forecasts that they've already set, which are pretty low, then things could get ugly. I have to look at both sides. But for now, we see what's going on. I'm looking to prepare myself, take advantage of the opportunity, and kind of see how things play out. It's exciting, but I'll leave it there. I don't want to keep ranting. I love you guys. I hope this helps you in some way, shape, or form. Drop a comment, like, show me some love, subscribe to the channel. Have a safe Halloween. Peace out.